Hello, welcome to the Work to Wealth Escalator, why a quality job is more than just an income. Thank you all for joining today. We look forward to a robust discussion. We have a packed agenda. We will be talking about issues related to quality jobs and what makes a quality job, what allows jobs to be also wealth generators for low-income wage earners. We will start out with a welcome from Kilolo Kijakazi, and who will do an overview of the Building Economic Security Over a Lifetime initiative. I am Solana Rice, Associate Director with PolicyLink, and we will soon move to presenters and guest speakers who will also give responses about their takes on what makes a quality job. So first we'll start with Janet Boguslaw, Associate Director with Institute on Assets and Social Policy, to give us an overview of what employment capital is and what makes a good job. Sarita Gupta, Executive Director with Jobs with Justice, will also present about the changing nature of work. And Ellen Bravo, Director with Family Values at Work, will share with us why good jobs are also family friendly. Want to thank everyone for joining us today and thank all of our presenters and partners. Also, Thomas Shapiro and Hannah Thomas from the Institute of Assets and Social Policy are joining us to help answer any questions that folks have as well. Just a little bit of housekeeping. We will be recording and archiving this webinar, and we will provide it online. All registrants will receive this via email later this week. All participants today are muted, but you should know that you can send any questions to us by using the chat feature on your screen. Also, we will be tweeting during this webinar using the Wealth Gap Wednesday hashtag. Wealth Gap Wednesday is a campaign to raise awareness about the wealth gap, the growing wealth gap in the U.S. With that, I will turn it over to Kilolo Kijakazi to give us a welcome. Kilolo.
Thank you, Solana. And hello and welcome to the webinar. It is a pleasure to join with my colleagues from our Quality Employment Unit at Ford and their grantees, as well as the grantees from the Building Economic Security Over a Lifetime initiative that I manage. Yesterday, I participated in a convening that took stock of the 50 years that have passed since President Johnson's declaration of the war on poverty. It seems fitting also to begin this discussion by acknowledging this anniversary, its ties with the Ford Foundation's history, and ongoing work like the research on employment capital by the Institute for Assets and Social Policy. The tenets of the Lyndon Johnson's war on poverty were directly aligned with the mission of the Ford Foundation. First, people should be economically secure. Second, those impacted must have a voice in the decision-making about their lives. And third, to achieve real change, the focus must be on structural barriers. Social justice demands that human beings be able to meet their basic needs, and this requires poverty alleviation. Poverty alleviation through safety net programs is essential for people with limited means to survive. But survival is not sufficient. Survival is an objective, but the goal for every person is to reach their full potential. President Johnson said, "Our aim is not only to relieve the symptom of poverty, but to cure it, and above all, to prevent it." Again, this view was directly aligned with that of the Ford Foundation. And in the mid-1990s, Melvin Oliver came to Ford as a new vice president. His research, along with Thomas Shapiro, showed that while there was a gap in the income received by white Americans and African Americans, this was far outstripped by the wealth gap. This is the difference in the net worth of families on average between the two communities. Oliver and Shapiro's research demonstrated that this racial wealth gap is due in large part to structural barriers for communities of color within the same policies and programs that create wealth for white communities. A case in point is the New Deal legislation that created the Homeowners Loan Corporation for homeowners to help homeowners avoid foreclosure during the Great Depression. The legislation assisted white homeowners to preserve their assets, but out of the nearly 1 million loans made, none went to African Americans. To address these structural barriers to economic security, Oliver created the Asset Building Program within the Ford Foundation. This approach was based on Michael Sherrodden's theory that by providing low-income communities with the same kind of incentives and structures that upper-income communities enjoy, low-income families would save and invest in long-term assets and become economically secure. Over the last 2 decades, Ford Foundation has supported research which established that low-income people can and do save when provided incentives and structures that higher-income people have. Low-income communities that participate in asset-building programs invest in long-term assets like homes and hold on to these assets. In fact, participants in these programs were far less likely to have been subjected to the subprime loans and far less likely to face foreclosure than their similarly situated people during the recent financial crisis and subprime loan debacle. Research also has shown that current tax expenditures for asset building are skewed to the upper income community and not effective. And Ford has supported research by Tom Shapiro and his colleagues at IASP demonstrating that the racial wealth gap has tripled over the last generation. The research that Janet will discuss today goes beyond measuring the magnitude of the racial wealth gap and its trajectory over the last generation and helps us to better understand what is driving the gap and the kinds of equitable policy changes needed that would enable people with limited resources to save, invest, and move from economic insecurity to sustainable upward economic mobility. And with that, I'll turn it back over to you, Solana.
Thank you, Kilolo. So we will now turn to a presentation by Janet Boguslaw to talk more about employment capital and their recent publication in their Leveraging Mobility series. Janet?
Thanks so much, Kilolo and Solana, for this opportunity to join you today. Before I dig in, I want to acknowledge that this research is the product of many people, too numerous to name here. I just want to highlight my co-authors, Hannah Thomas, Sarah Chaganti, Alicia Atkinson, and Tom Shapiro. And Hannah and Tom will also be on for the Q&A that follows. I'd also like to acknowledge and thank the Ford Foundation for its support of this work. The Leveraging Mobility study draws on a unique longitudinal data set of 137 in-depth interviews, conducted first in 1998 and then again in 2010 with white and African American families. The interviews offer a rare look at family financial lives, decisions and trade-offs that were made during a decade of particular economic volatility. These interviews help us understand better why income gains alone often fail to reduce wealth disparities. There are 2 important findings from this work that I want to discuss in the next few minutes. The first is that employment capital resources provide more than simply non-wage compensation. They actually build and protect wealth through job benefits, job flexibility, and consistent work. The second finding is that wealth-building job characteristics are distributed unequally among racial, class, and occupational divides, perpetuating inequalities in wealth building. This helps us understand part of the puzzle about why the racial wealth gap has been widening over the past few decades. I want to take a minute to introduce why we talk about wealth and why it is important, reinforcing some of Kilolo's comments. We often think about income as the measure that we want to look at to understand a family's economic security and well-being. But income is like a river that provides economic security only for as long as it is flowing. Wealth, on the other hand, is a store of financial resources that allow families to manage periods when the river of income slows or dries up. Wealth is also a store of resources that can be drawn upon later in life, for example, during retirement. It's the foundation of resources that families use to invest in their own mobility and economic security, like investing in education or starting a business. Wealth in this way can provide stability and enable opportunities for upward mobility. We know from many studies right now that overall wealth inequality is higher in the United States than at any time since the Great Depression of the 1930s. We also know that wealth is distributed unevenly, and as a result, so are the benefits of holding wealth. We also know from our own earlier research that wealth is distributed unequally between different racial groups. This slide shows the wealth of white families, the blue line over time, as compared with African American families, the red over time. We can see that in 1984 there was a wealth gap of $85,000 between the median wealth held by white and African American families. But by 2009, this gap had grown to $236,000. In 2009, white families held over 9 times as much wealth as African American families. The leveraging mobility data helps us understand what is going on, why this gap is growing so rapidly. One of our findings suggests that wealth-building opportunities vary by occupational sector, and African Americans are significantly excluded from wealth-building occupations. Let me explain this conclusion first by talking about employment capital and how that contributes to wealth building, and then by looking at data that suggests trends in the continued racialization of occupations and exclusion of African Americans from wealth-building employment opportunities. We were surprised to find that more than 2/3 of the families we interviewed had seen their wealth increase over this 12-year period. We were also surprised to find that African American families in our sample saw their incomes increase and educational credentials rise in relation to those of white families, yet their wealth increased at a significantly lower rate. When we looked at the data and asked what were the key elements allowing families to build wealth, we saw that certain non-income-based characteristics of employment were critical in facilitating a pathway to building and protecting wealth for the families that we interviewed. However, we also found that not everyone had access to the same kinds of jobs. Households of color were more likely to work in jobs that have fewer of the job characteristics that allow families to build wealth. The data suggests that the link between employment and building wealth goes far beyond the paycheck. We believe employment capital can help us understand a part of the story of why we see growing wealth gaps, and in particular, the large racial wealth gap. So let's dive into the characteristics of jobs that build and protect wealth. We call these wealth-building and protecting characteristics of employment capital. We identified 3 specific characteristics as important. First, job benefits. They take various forms, providing access to wealth-building opportunities and to financial compensation by reducing employees' use of income to cover costs for things like retirement savings, paid sick and vacation days, and health insurance subsidies, disability insurance, and education benefits. Many of these are benefits that are incentivized for employers and employees through the U.S. tax code. Of the 137 interviews in 2010, nearly half had access to some of these job benefits through their work at some point over the 12 years, and 4/5 of these families saw an overall increase in their wealth. But the risk of not having some of these benefits also had a negative impact on their occupational mobility. A number of people interviewed talked about not taking the risk of changing jobs because they might lose their benefits or a portion of them. Concerns about benefit security clearly had an impact on potential job advancement. Another key characteristic is job flexibility, which includes modified work schedules around caregiving needs, opportunities for compressed work weeks, job sharing, and paid sick or personal days. In our data, paid sick time emerged as particularly important for families to maintain their jobs and protect their wealth. We also heard from many that the lack of flexibility offered around child care needs led parents to leave jobs with good benefits, leading to reduced incomes and fewer wealth-building opportunities. The final big characteristic that built wealth was consistent work. This includes stable employment with no gaps between employment, even if people have changed jobs, or long tenure with one employer and sufficient hours to qualify for benefits. Nearly 2/3 of the families interviewed had one household worker with employment stability, and 3/4 of those saw their wealth increase. So how does employment capital work to have comprehensive wealth-building impact? Here's an example of how it can play out for one family. Robert and Jackie have 2 children. Robert is self-employed and experiences periods of under or unemployment. Jackie is a billing clerk and has been employed by the same company for 6 years. Jackie builds wealth by having consistent work with no periods of income loss due to job loss or lost paid work due to sick days for herself or her kids. She has subsidized health insurance with low out-of-pocket premiums. She uses a pre-tax flexible spending account to pay for additional medical expenses and child care, using the saved pre-tax income for other purposes. Jackie has some flexibility in work, so she's able to work remotely or shift her hours slightly without losing pay to care for family needs or attend school conferences. And she has paid sick time if she's temporarily unavailable to work. She has a retirement account with an employer match that continues to build while she takes time off for illness or vacation. Additionally, she was able to use tuition benefits to help pay for additional education, which resulted in a promotion and a raise. And her children are eligible for tuition remission at her workplace, so she can save more money for retirement and emergencies and reduce the student debt her children might otherwise incur. Think about all of this for a moment. I have not mentioned the role of income, yet you can see how Jackie's job enables her to build wealth and to live with financial security. If Jackie were to lose her job, she would have more education, a retirement account that she might draw upon, emergency savings, and good health to draw upon to help protect and secure her family's financial well-being. But this was not the case for everyone we interviewed. For many, key employment capital characteristics were missing. Nearly 1 in 3 of the families interviewed had workers who were self-employed. Without access to employment capital, these families were not only less likely to build wealth, they were less likely to be able to protect their wealth in times of joblessness or underemployment. The wealth-building experiences and perspectives of those families without employment capital are quite different. For example, in 2010, Darlene Oxford was unemployed and could not afford to buy health insurance independently on the market. She lived with fear that illness could lead to death, which could lead to home loss, and repeatedly told her son not to get sick because, she said, we can't afford it. Hopefully with the Affordable Care Act, some of those stories will change. Krista Barzak left her full-time employment with job benefits for contract work so she could be more available for her daughter who was having trouble in school. Since she was now self-employed, she was not eligible for unemployment benefits. When work dried up, she had to draw down her family's assets until she qualified for public safety net programs. As you can see, employment capital provides stability, security, and opportunity. A job is more than income. So who is missing access to employment capital? Some occupations and jobs are more likely to provide employment capital than others. Part-time jobs, contract work, service sector jobs, and self-employed jobs are less likely to have employment capital characteristics. National data from the Bureau of Labor Statistics indicate that only 1/3 of workers in the service sector have access to retirement benefits, and less than half have access to paid sick days. By contrast, 2/3 of workers in the management and professional occupational category have access to retirement accounts, and 85% of these have access to paid sick days. In our study, despite larger gains in income over the 12-year period, service workers built much lower amounts of assets than families headed by workers in the management, professional, or related fields. Families with the head of household working in management, professional, or related occupations saw their incomes increase at the median by $13,000, and their net financial assets increase at the median by $82,000. By contrast, at the median, workers in the service sector saw a greater increase in their incomes of almost $28,000, but their wealth grew far less, by only $17,000. What's the story behind the disproportionate nature of median income and wealth gains observed? The experiences of families tell us that while income gains are important, wealth is generated not only through gains in income, but importantly, through access to wealth-building employment capital mediated by the worker's occupation. In our 2010 interviews, 2/3 of the management professional and related occupational group is white, while just over 4/5 of the service sector group is African American. This is somewhat comparable to national trends. One national study showed that controlling for education, 87% of U.S. occupations are racially segregated. African American workers are more likely to be employed in the service, sales, and office sectors than are white workers, and these are sectors with lower wages and lower rates of employment capital. While they made up 11% of the total U.S. workforce in 2010, African Americans represented 25% of service sector workforce. These patterns of occupational segregation mean that families of color have less access to employment capital, which is so important to building wealth. With this racial equity overlay, we begin to understand the stark difference in wealth returns on a dollar of income between white and African American households. The interviewed data show that a worker's occupational sector plays a key role in structuring access to employment capital. Addressing these occupational and sector inequities would help reduce the growing wealth gap and ensure that all families who work hard can build wealth for their economic security, well-being, and upward mobility. So I want to talk about 3 categories of policies and programmatic change that can begin to help build employment capital for so many. This work can be done at the federal and state level in cities and towns and advanced through public, nonprofit, and private sector work. So let's look at ways to promote equity and access to employment capital within the workplace, reduce and eliminate occupational segregation, and create more data to document need and develop innovative policy solutions. I'm going to go through each quickly and hopefully give you a little food for thought. So how can we promote equity and access to employment capital? Through legislative and tax policy, we can incentivize and encourage long-term savings plans across income levels. For example, by creating a refundable tax option for low-income workers who save for retirement, emergencies, or children's savings programs. We can increase the ease of access to and portability of retirement accounts, for example, by reducing enrollment and vesting periods for new hires. We can establish minimum employment capital standards and require government contractors to meet these standards. We can require that all employment capital opportunities be made available to all workers employed on behalf of a firm, whether full, part-time, contract, or temporary, and provide publicly run marketplaces for smaller employers to access retirement accounts and other employment capital opportunities for their employees. We can strengthen access to worker representation in the workplace. Unionized jobs and jobs with significant worker input have more employment capital available to low-wage workers than those without. We can promote job sharing, job flexibility to reduce work-family conflicts, and can mandate a minimum number of sick and vacation days for all workers to reduce work-family conflicts and to reduce wealth depletion due to unpaid sick days. Alan will talk more about this in a few minutes. Reducing and eliminating occupational segregation is another critical component and can have big change and impact through both policy and through changes in employer-based organizational practices. So we can establish minimum employment capital and racial and ethnic diversity standards in federal contracts. That's one approach. President Obama is seeking minimum wage standards for federal employees and contracts. Maybe employment capital is next. A legislative mandate committing to minimum standards for work remuneration, which would include employment capital, would help ensure that work is fairly rewarded and tax expenditures fairly distributed. We can also improve enforcement of existing equal opportunity laws and practices. And expanding employment and education initiatives designed to increase the racial and ethnic diversity of workers in high employment capital occupations is critical. I want to emphasize the point that organizational change is necessary along with policy change. For example, through another project, we are working to increase the diversity of healthcare occupations through changes in employer-based hiring, retention, and advancement strategies. These jobs have high wages, career pathways, and strong employment capital benefits that help build wages and wealth. While the Affordable Care Act pays for the recruitment and training of new and incumbent workers for this project, a key part of the success strategy is that it also funds working with employers to change how they do business. An employer commitment to diversity and inclusion is necessary if populations who have been excluded from particular professions and occupational sectors are to access wealth-building quality jobs. Finally, why focus on data development? There are many ways that more and better data can be collected to improve our understanding of the wealth-building characteristics of employment capital. Without good longitudinal data, it's much harder to understand the source of the problems of wealth building and growing inequality. Data can also help us craft innovative solutions. For example, data help drive identification of need and development of the Treasury Department's new My IRA program. The accounts are targeted at the millions of low and middle income Americans who don't have access to employer-sponsored retirement plans. That includes roughly half of all workers and 75% of part-time workers. And to be a bit provocative, I want to talk about other ways that data might drive change. Many of you are familiar with the EITC, the Earned Income Tax Credit, which is a federal credit for low and moderate income working people. Over 28 million working families and individuals received the EITC, and in 2012 it lifted about 6.5 million people out of poverty, including over 3 million children. The EITC reduces income poverty directly by supplementing the earnings of low-wage workers. Perhaps we need a wealth-building tax-based opportunity structure that is similar to the EITC to help build wealth. It could address many of the components we've raised today. It could provide matched pre-tax retirement account opportunities, additional income credits, mirroring flexible spending accounts for child care and medical costs, and unpaid days for illness or going to a parent-teacher conference, and it could enable contributions to Social Security for unpaid caregiving. While it's critical to have employment-based capital building opportunities whenever possible, we can also begin to explore how to use the tax system to create more equity and balance in how the rewards of work are distributed. The stories and data in this report lead us to the conclusion that a quality job is more than just income, and that the work to wealth escalator is built on employment capital, a key feature of quality jobs. In an era of increasing wealth inequality, we have to look beyond income to understand how jobs translate into wealth, or don't for many. These proposed policy and programmatic solutions can improve access to employment capital so that all workers benefit broadly and equitably from its wealth-building and protecting effects. Understanding how the continued racialization of occupations and employment sectors limits wealth building for households of color also provides insight into the way we can work to close the racial wealth gap. Scaling up what we know works not only makes work pay, but it also builds wealth and opportunity more broadly. Thank you so much for participating today, and I will turn it over to our next speaker and look forward to your questions and comments.
Thank you, Janet. This is Solana again. Thank you so much for that really helpful framework around employment capital and easily and succinctly breaking down how we think about jobs and the ways that they support wealth gains, and also those fantastic concrete next steps. That's very exciting. Just very quickly, there are a couple of clarifying questions. One, these are the racial wealth gap numbers that were shown at the very beginning are adjusted for inflation according to 2009 dollars. And we can answer this in the Q&A as well. But the occupation and assets slide, I think it was slide number 2, table number 2. Folks were just curious about what the time period was that was compared.
I'm wondering if I can get it back up so people can see it. Okay.
So this is
So,
so this is Hannah speaking. Hi there, everyone. This is Hannah Thomas. I can speak a little bit to the time period that this is comparing for the change in median income, the change in net financial assets, and net worth. This was from 1998 to 2010 We did interview 1 in 1998 and the second interview in 2010. So it's comparing it from the beginning and end of a 12-year period.
Thank you. Also, just to answer a couple of questions, this presentation will be available and the recording of this webinar will be available at accesstofinancialsecurity.org, and we'll make sure to put that on our screen at the very end, and you will get all participants will get an email with that URL as well. Just a quick thing for our future panelists, and maybe Janet or Hannah wants to speak to this. Someone had a question about the focus on African Americans versus white communities, wondering if future panelists or Janet, if you want to speak to any disparities amongst Latinos. Let's save that question. I just want you all to have that in the back of your mind. We'll save that for Q&A. I think now we will move on to Sarita Gupta with Jobs with Justice.
Great. Hello, everyone. It's fabulous to be on this call. Again, my name is Sarita Gupta, and I'm with Jobs with Justice. And it's great to follow Janet and her presentation as she laid out very concisely some of the characteristics that help build wealth. I'm going to talk about the changing nature of work and what's really at play that actually has undermined the very characteristics, the very needs that were laid out, and why so many people are unable to build the kind of wealth that they need. Just for a second, Jobs with Justice, we were invited to be a part of this because we work on workers' rights and economic justice issues. We bring together labor, community, student, and faith voices at the national and local levels to win improvements in people's lives and shape the public discourse on workers' rights and the economy. So given that, it's not a surprise that we've been sort of following the trends on good jobs versus poor quality jobs. And I just wanted to lay out a bit of why we have poor quality jobs today and historically, over the past 4 decades, globalization has really transformed the organization of workplaces in the United States and around the world. As globalization led to the decline of manufacturing jobs and the rise of the service economy, workplaces have become increasingly decentralized and more jobs were pushed into the informal economy. And what I mean by informal economy is literally jobs that are functioning outside of government regulation. Employers systematically began attacking the National Labor Relations Act and essentially weakening workers' ability to organize. And same as at the last turn of the turn of the last century, African American and immigrant workers, this time largely from Latin America, Asia, the Caribbean, and Eastern Europe, are filling the lower tiers of the economy today. Workers can no longer assume stable, long-term employment as high turnover, part-time work and contingent labor come to increasingly define employment in the United States today. So as a result, we have too many people having to make tough choices between paying for rent, for food, for health, for childcare, and in that process, unable to build the kind of wealth we've been talking about to create stability. So a little bit more about the changing nature of work. We see a rise of contingent labor. By 2020, 40% of all workers will have a contingent job. And what I mean by contingent, I mean part-time, temporary, and subcontracted jobs. These are jobs that are not on career pathways, and these are also jobs where there isn't a clear understanding of who their employer is. A second sort of characteristic of the changing nature of work is the rise of long-term and structural unemployment. 40% of unemployed people today have been unemployed for 25 weeks or more. And then a third characteristic of the changing nature of work is the linking of local and global labor markets. So the result is we have a growing workforce in this contingent labor category, and these are growing numbers of workers who cannot access basic protections nor the safety net as it's designed today. When the New Deal happened, it was based on a very different context of people having access to jobs for longer bouts of employment and shorter bouts of unemployment. And today what we see is the opposite. And so we don't actually have a safety net program nor the legal frameworks to protect workers in these contingent categories. So why does work become contingent? Well, often it's to prevent the increase of wages. It's to avoid providing benefits. Many employers choose the contingent pathway because they can avoid providing benefits. And often it's to stop the unionization of workers in a place of employment. So as a result, for many, many workers, contingent becomes the ceiling for many while wage theft becomes the floor. So the organizing challenge in all of this is that the model for worker organizing that has developed in the industrial era no longer holds true. Many of its core assumptions of stable employment, formal workplaces, and higher worker-to-employer ratios no longer hold. And fundamentally, the question that we are confronted with when trying to address the issues around contingent labor are who is the boss, who is considered an employee, and what are we bargaining about? So with every challenge, there's opportunities, and we think there's huge opportunities right now for us to be developing a next generation set of workers' rights policies, legal strategies, organizing models, and safety net programs to actually meet the needs of the realities of workers today. So again, as I said, the contingent categories that we're talking about is subcontracted, temporary, and part-time workers, but we're also looking at the realities for unemployed and underemployed workers as well. So the next few slides, what I've done is just tried to share examples of the kinds, when I talk about a next generation set of policies and organizing models, I wanted to lay out in each of these categories examples of the kinds of work, the kinds of struggles we're talking about, and the values proposition. So if you look at subcontracted workers, these are examples are warehouse industry, hotels, healthcare, agriculture. Some of the examples of the fights are who is the ultimate beneficiary responsible for labor standards. We see a lot of industry-wide bargaining that's starting to happen. The values proposition is workers need to bargain with the real boss, and people profiting should actually take responsibility. Temporary workers is another category. These are a range of industries of construction, entertainment production, teachers, professors, IT workers. Examples of the kinds of struggles and policy demands are around career ladders and access to unemployment insurance, expansion of unemployment insurance. The values proposition here is workers should not just stay at one level and sort of hitchhike through the economy. Jobs should come with careers and the opportunity for growth. And then part-time work is the industries are, examples are retail, hospitals, teachers. Examples of struggles and demands are around rights for part-time workers and scheduling reform. And the values proposition is part-time work should be voluntary, not involuntary. And that finally, we have the unemployed, underemployed category, and this is sort of the industries, all low-wage industries and increasing high-wage industries actually. And the way that a lot of organizing groups like ourselves and many partners we're working with are looking at this is how do we look at struggles around revenue fights and fights for public money and the creation of public jobs and the idea of sort of a bad employer's tax as a way to actually meet the needs of unemployed and underemployed workers today. The values proposition is companies should be held accountable for creating good jobs if they are getting tax breaks, and that we want to be pushing for full and fair employment. So I wanted to close out my piece with just a couple of examples of struggles that lay out the realities of contingent labor today and then loop it back to the conversation overall. So we've been a part of this campaign to change Walmart and ultimately change the economy. And the reason I wanted to pull this out as an example is because I think it's important in this moment when there's a larger context and political discourse happening around income inequality and the need for good jobs. These kinds of struggles have seeded much of the discourse on wages today. So many of us have been following the Fight for 15, or restaurant workers who've been in motion around raising the minimum wage for tipped employees. Obviously, the federal minimum wage work that's happening, state minimum wage fights. We're really clear that the discourse on income inequality can't begin and end with the minimum wage, that we actually need to ride this wage wave, as we like to call it, in order to change a broader set of conditions for workers and to push for defining good jobs in the 21st century. So issues like wages, immigration reform, scheduling, sick days, family leave, revenue strategies are all part of the puzzle, if you will, coming together to actually push for the creation of good jobs today. And so in this example of the Walmart campaign, many folks could talk about the Walmart campaign as just the set of workers that are in retail stores, but actually what has happened is that we've been redefining who is a Walmart worker based on these contingent categories. So there's a set of retail workers that are organizing, there's warehouse workers along the supply chain, and examples of production workers, so seafood workers, garment workers, who are all producing products that are sold at Walmart, who ultimately most are subcontracted workers, but who is ultimately held responsible needs to be Walmart as the largest private employer, one of the largest private employers in the U.S., but also who's had a role to play in driving down some of the wages and working conditions across these sectors. Some of the issues that have come up for workers on all these fronts have been wages, scheduling, like actual access to, being able to have control over their schedules, access to benefits, health and safety issues. And then there's been a number of organizing and policy hooks that I've listed on the slide that organizers and groups on the ground and globally have been using to begin to address the quality of these jobs. And the thing I want to really stress here is that we're very clear that quality jobs go beyond income, that this fight isn't just about wages, but it actually is about all of these issues in order to make retail jobs, which is one of the fastest growing employment sectors in the U.S., better jobs, and jobs that can actually result in the kind of wealth building that we've been talking about. So there's multiple examples of campaigns, but I wanted to lay this out. Things like the Large Retail Accountability Act in D.C. was about raising wages for large retailers, workers at large retailers. Things like exploring formula retail ordinances, so really looking across sectors and in geographies to raise wages. A bad employer's fee, if an employer isn't going to negotiate with workers on wages and working conditions, how do we extract a fee that can add to create wage subsidies and add to family, to be able to pay for family leave and sick days and a number of other needs that workers today have. And there's many more examples like that. So just to close out, I really wanted to stress the changing nature of work because it goes right back to, again, what Janet laid out, that if we understand that characteristics that help build wealth are job benefits, job flexibility, and consistent work, I've just laid out for you that a growing population of our workforce today actually do not have access to the very characteristics of building wealth. So there's huge challenges facing us, but enormous opportunities for us to really rethink, like I said, the next generation of workers' rights policies and safety net programs and legal frameworks to support both the organizing and the betterment of the lives of millions of workers. Thank you.
Thank you, Sarita. That was really compelling. Thank you for sharing that. We do have one question specifically about your presentation. Someone's wondering if you could talk a little bit more around the bad employer tax or fee. What does that look like? How does it work? Who governs that? Just your thoughts.
Sure, sure. This is actually a very new concept that Jobs to Justice, and we've been working closely with an organization called the National People's Action and National Guest Workers Alliance. We've been sort of testing out this concept and planning to test out in a number of cities. The idea is that we actually create a public entity that that would, again, extract a fee from what we would call and define as bad employers. So employers who are not paying adequate wages, who are not providing benefits, all of the issues we've been talking about, yet in many cases receive major tax breaks to come into communities claiming they're creating jobs. And so the idea is to create a public entity that would literally tax the bad employers, and that those resources, if the employer isn't going to negotiate with workers directly, then and the community directly, it goes to a public entity, and through the public entity we're able to figure out what the needs of those local community is and workers are, to actually translate into, as I was saying before, wage subsidies for some workers, or it might be to help pay for important infrastructure and systems like transportation in a local city, because so many of the low-wage workers depend on transit to get to work, or it could be for public safety net programs. So, so this is a concept that's continuing to build out. We're working with a number of different policy allies to help us and test this out in a number of cities. I hope that helps.
That's terrific. Thank you. And now we'll move on to Ellen Bravo with Family Values at Work. Ellen.
Hi, it's great to be here. Thank you so much. Family Values at Work is a network of 21 coalitions, coalitions in 21 states that are working for policies like paid sick days and paid family leave. And we're delighted to be part of this conversation. We were so glad to see the three components, but I want to emphasize how much job benefits and flexibility are in fact integral to consistent work and all that job tenure means when we talk about pay levels, retirement, the ability to save, and the ability to hold on to savings. Here's the fact. Work can't pay if it doesn't last, and it can't last if it jeopardizes kids or parents or our own health. A lot of people will tell us, I suck it up when it comes to my own illness, but when it's my kid, when it's my dad, I'm going to be there for them. And we have to remember that we're talking about job retention policies. Job loss translates into a cycle of poverty. You know, I remember one of my phrases I most hate is when people talk about folks becoming dependent on public assistance, when in fact the problem is that work for so many is undependable, and these caregiving issues is often why. James Baldwin reminded us that anyone who's ever struggled with poverty knows how extremely expensive it is to be poor. So we're talking about, think about that. You know, you lose a job and you have to start over. It means your pay is lower at the next level, and it means that you're going to have a smaller base pay if you get raises, on which those raises will be based. It's harder to put money aside for unexpected costs. You know, it's like moving. You have to have a safety, a deposit. Otherwise, if you have any savings, you find yourself raiding them. And then there's a vicious cycle where you're seen as having a spotty work record. You're seen as having a poor work ethic. Then you get in credit problems. Then it's both of those things make it harder for you to be hired to get a good job, and the cycle continues. So let's take a little look at what the policies are right now that people are working in and why we're in this pickle. For many people in the United States of America, the leave policy is if you leave, don't come back. We have a law called the Family Medical Leave Act. 40% of the workforce, 40%, are not covered by that law. We saw in surveys that workers who are in 2012 compared to 2000, 2.5 times as many people who are covered, eligible for leave, need leave, aren't taking it. The reason? Mostly because they can't afford it. And a third of those who do take it are cutting their leave short. This has a big impact on health, which has an impact on ability to stay employed also. 80% of low-wage workers don't earn a single paid sick day. So when you're sick, for lots of people in this country, you're fired. 23%, almost 1 in 4, have lost a job or been threatened with job loss for taking time to care for themselves or someone that they love. Like I said, this affects your health, and that affects your ability to stay employed. So think about it. People go to work, they have a cold, they get pneumonia, then they wind up losing even more time. People get undetected, undiagnosed, and then their conditions get much worse. Cancer that can't be treated, etc. Sorry, I don't know why this keeps popping up on my screen. And we should remember what it means. You go to work sick, other people get sick. For example, in just 1 year of H1N1, 7 million caught the flu at work because while the public health experts said stay home, their boss was saying you'll be fired if you do. You lose a job, or you lose, let's talk about losing pay. 1 day's pay is a month's diapers. We have people all the time who say, do I hang on to my phone or my Metro card? 3.5 days pay you lose, that's a month's groceries. This has a generational effect. Think about it. Kids whose parents lose a job, they may have to move. They may have to move in with relatives. They may become homeless. They have to change school. All of these things make it harder for them to get an education that's going to lead to college and a stable job. And another one of my favorite canards that I hate, people who talk about that women trade income for flexibility. The fact of the matter is, the low-wage jobs are the least flexible, and it's because of that that women lose hundreds of thousands of dollars in their lifetime because of being good parents or good children to their parents or good partners to their partners. We cannot solve the asset goal if we do not address these problems. The Shriver report that just came out that looked at women, that 1/3 of women who are in or on the brink of poverty, the #1 policy that women identified, like the report that Janet talked about, that would make a difference in their lives is paid sick days and paid leave. I think President Clinton talked about this very eloquently on the 20th anniversary of the FMLA, a law that he pointed out, is not a monument and that we're meant to improve these laws. He points to the fact that people are both breadwinners and caregivers, and that he said people desperately want to have successful families and be good parents. And they also want to have a job and succeed at it. If you take one away to get the other, the country pays a grievous price and every life is diminished. This is something I want to introduce as a concept. The solutions that we need are minimum standards of paid sick days and paid family leave. And here's a good thing. These policies apply to everybody. One of the things about contingent work is that it's a legal way to cheapen the workforce because it's a form of discrimination that has not been prohibited, even though it has a disparate impact on women and people of color. And it's something that pay parity for part-timers and regardless of employment status is something we need. But these benefits apply to part-timers and temps. It's one of the reasons why the lobbies are so fighting so hard to keep us from doing it. I don't like to use the word benefits. I think of this as a way to keep your earnings. They're not extras. A minimum wage earner with no paid sick days is really a sub-minimum wage earner. Here's the good news. A lot of employers are already doing it, and they do it because it's the smart as well as the right thing to do, and both of those things are important to them. And they're breaking what we call the identity theft of these lobbies who claim to speak for all employers. But laws aren't written for them. Laws are written for the ones who aren't going to do it anyway. Otherwise, I mean. When the FMLA passed, I was appointed to a bipartisan commission by Congress to study the impact 2 years later. And we found that 2/3 of covered employers, remember the majority of employers aren't covered, 2/3 of covered employers had to change at least one policy. Often, you know what that meant? It meant including men. It meant including adoptive parents. It meant including care for your elderly parents or for sick kids. Freddie Casablanco reminds us of a second good news. This is not a favor to women. It's a better way to do business and run the economy. Because it's a job retention policy, it's good for families' economic security, and that means they'll have money to spend, which is what business owners need. You know, Freddie Casablanco says, who are my customers? They're the same low-income Latinos who live in my neighborhood. And if they lose a job because they don't have paid sick days, they don't come to my jazz club. He always tells employers, your workers are my customers, and vice versa. And that's a really good point to remind us. And the other good news is that we're winning in lots of places. I'll tell you more about them. You can go to our website, familyvaluesatwork.org. But just this year already, we won in Newark. We expanded in New York City. There's movement in Chicago, Minnesota, Vermont, Eugene, Oregon, Tacoma, Washington, and in Massachusetts, as is becoming a model for many other places. Raising up Massachusetts means linking paid sick day with minimum wage and making it clear that these are interlinked, that we can't, workers need the basics, and that means they have to have both a basic wage and time to care. I'll tell you why we're winning. We're winning because women like Emily Rodriguez, and women and men, are getting involved in these fights. I interviewed this woman, Monica Green. If you go to our YouTube station, you'll see a great video of her story, a Seattle Safeway worker who fought for paid sick days and why she needed it. And she was telling me that, 5 minutes away, they're outside Seattle, is another Safeway that doesn't have paid sick days, and describing a colleague who had to work sick and why she was fighting for a statewide bill. And then she said to me, do you think we could ever get it for the whole country? And I said, what do you think it would take? She said, workers like me telling their stories and getting involved. And that's exactly what's happening. We're also building these broad coalitions that include people who care about gender and racial justice and worker rights, but also people who care about asthma and Alzheimer's and kids and seniors and school nurses and people who want to stop domestic violence, and these business owners, like I said, who are breaking identity theft. And we're building a body of evidence that says the doomsayers are wrong, as they always have been. But we need best practice employers to realize that one of the best practices is speaking out in support of public policy. And we're hoping to get many more to do this. I don't know if you can recognize what this slide is. It's a caged bed. A lot of hospitals have these. And I was very moved once. In 1988, we won family leave in Wisconsin. And we did it by taking a group of kids to Madison, each of whom had an experience where their parents needed family leave. And one of them was a kid named Noah Michelson, who was 9 at that time. When he was 5, he had cancer. And he described how both his parents, he needed them both there to be able to bear the treatments he had to get, one to hold him and one to tell him the story. The kid in the next bed, who was probably in a bed like this, didn't have parents there during the day. And at the time, Noah didn't know why. But now he did, and it's because he realized they'd lose their job and their income if they were the parents his parents wanted to be too. He remembered a lot about that kid, and he remembered that he loved the Supremes and that he always sang stop in the name of love. I feel like that should be our motto. We have to stop in the name of love and of family and of public health, of women's equality, of the economy, and of assets building, letting this situation continue. We need these policies, and I applaud you so much for the work that you're doing. I hope you'll all like us on Facebook and follow us and learn more and get engaged through our website. Thank you so much.
Thank you, Ellen, for that powerful presentation. That was fantastic. We will now move to next steps and policy solutions. Just have a couple minutes for each presenter to share final thoughts, either reactions to other presenters, additional points that you'd like to make, and then right after that we'll open it up to Q&A. We have some questions in the queue already. So next steps, policy solutions. Anything that anyone else would like to share?
Hi, well, this is Janet. I guess those were two great presentations, and I guess there's a couple of things that I just also like to pull out of them. One is that there's a lot of contingent and part-time work at the higher professional levels as well in terms of consulting work. And I think this is probably another area where there's a lot of racialization of professional occupations, and it's an area that we have to pay a lot of attention to make sure that even at the higher professional levels that people of color get the full-time jobs and don't end up working as consultants and not kind of capturing the benefits that can accrue to them, and to understand how and why some of the middle class is struggling to move forward. The other thing that really struck me in listening is to just make sure that we make the point that, you know, so much of the discussion about building wealth is tied to education. And we know that with education comes student debt, and if we don't have high quality, good jobs, then we have a lot of educated people who are not working full-time or not working in positions where they can pay off that debt, and they not only are not getting sort of the employment capital benefits, but they're also not having opportunities to pay down that student debt. So, you know, as Ellen was saying, it's all related. You can't do one without the other, and it's a big package picture. And, you know, what we really, I think, understand from all of these discussions is that it's not just to individuals working hard to do well, that there are real structural barriers out there, and that we have to really identify those structural barriers. And if we want to have impacts of scale, we have to join together to move this policy agenda forward and the organizational practices forward as well.
Thank you, Janet. Sarita, anything?
Yeah, that was great, Janet. Actually, you made a few points I was going to make, so just to build off of that, especially your last point here, I think it's so important that we continue to find ways to be linking these different, what can sometimes come across as different movements of work, but are actually interrelated. So even as I was describing the changing nature of work, there's a whole community of groups that are beginning to come together, including Family Values at Work, in fact, to help us think about how these translate to real organizing and policy opportunities at the local and state levels, as well as at the federal level. So there's really just a very natural way in which we are all trying to connect what have been issue silos before into a much broader narrative, because what we need right now is a broader narrative of the economy and what's really working, and helping people place themselves in that narrative to find strength and power to actually change their conditions. And that's across the board, and I appreciate the comment you made, Janet, because it's true that contingent work is not just an experience of low-wage workers. It is in all sectors and all income brackets, and we have to keep thinking in a very intentional way about how to connect these different policy solutions. And then finally, this piece about student debt is very real. At Jobs of Justice, we have a Debt-Free Future campaign that runs parallel, and the goal is to intersect it with this Future of Work initiative we're doing for exactly that precise reason, Janet, that you laid out, that we can't talk about building wealth and good jobs and not also address the issue of student debt and access to education, and also breaking down some of the myths that exist right now out there about having education in itself will lead to good jobs, because that's just not the reality for so many people right now. So what does that mean in terms of the kinds of shifts we need to make, both in the education arena as well as the kinds of jobs that get created and sustained in our economy today? So anyway, I'm excited by this conversation and continue to want to dig deep and look forward to continuing to do that with all of you.
Thank you. Ellen, do you have any additional thoughts that you'd like to share?
Yes, I so appreciate what Janet and Sarita just said, and particularly the working across what used to be issues issue, silos. I think there's a lot more collaboration going on and both thinking through these issues together and then acting together. And I want to mention a couple of other things the opposition uses that I think your research is really going to help just demolish. One is the notion that any job is a good, will do, and people should be grateful that they have a job, and trying to spread that mentality so that people won't ask, what is it I really need and what is it I deserve, and what kind of nation do we want to be? And I think that what helps shatter that myth is how much job loss is related to bad jobs, that the very characteristics they lack make it hard for people to stay employed, and that affects all the other things we were talking about. And secondly, you know how the opposition now, to offset the rising momentum for the adjusting the minimum wage to make up what it's lost in inflation, will say, oh no, we favor the earned income tax credit because that way we'll target the people who need more money and not the rich teenagers who are doing these jobs. Well, first of all, I've never heard anyone say, gee, that CEO has so much money already, they don't really need another $12 million. And secondly, although we, of course, support the earned income tax credit and work to improve the safety net, what workers really want is a good job and to be able to afford the things they need and take care of themselves. And that's what they need. That extra income won't solve their problem and help them get to wealth and self-sufficiency if they can't get rid of the other characteristics that wind up leading to job loss and loss of income. So I really appreciate your synthesizing these connections.
Great. So now some questions from the audience. We have a question about any examples of employer-supported savings accounts. We know that employers encourage retirement accounts, but do we have any examples of employers encouraging savings for emergencies or health or any other type of, or even doing small dollar loans, anything like that? Sounds like that's a great question for the entire audience. We'll make sure to connect folks to resources about that going forward. Just one last point to see if anyone was on mute and was trying to speak. No. Okay. Other ideas about employers and how do they benefit from providing more employment capital? I think, Sarita, some of your presentation got to this about what is the value proposition around supporting contingent workers. Do any of you have thoughts about how to frame these issues to employers to show that there is a benefit to them as well?
Well, this is Janet speaking. Can you hear me? I'm on speakerphone now.
Yes.
So one of the projects that I mentioned briefly that we're working on is trying to work with employers to diversify the healthcare workforce. So there are a lot of people who work in healthcare who are working in food services and in housekeeping in healthcare organizations, and sometimes they are employees of the organization, sometimes they're not employees, sometimes they're contracted services within, say, a hospital or long-term or home care setting. So one of the things that we've been doing is working with the healthcare providers to help them understand how giving and providing better employment capital and bringing more diverse workers in helps reduce health disparities in their communities, which helps reduce their overall costs for providing health care in the communities. So we're trying to help them understand that having a healthy, strong, engaged workforce helps them do their business better and has better long-term outcomes for both their reputation as well as their bottom line. So some of this needs to be done through policy, and some of it needs to be done by really working, I think, with employers to come up with that win-win by reframing how they understand what a win feels like and looks like and how it's measured.
Thanks. Any other examples of working?
Yeah, this is Sarita.
Yeah.
Well, I just want to lift up that I think there's great examples of groups that are really trying to engage and create sort of a category of high road employers to work with on these issues. So when you look at the Restaurant Opportunities Center, for example, has been building with a set of employers, restaurant owners, to really talk about the value of having better standards in place, both in terms of wages as well as access to sick days and family leave. I'm sure Ellen can speak to this much more, but there's really good work happening in the restaurant sector. Similarly, in the care sector, I think there's a lot of work happening, especially with individual, individual families who hire caregiving support domestic workers who are trying to figure out how to organize a set of high road employers who are willing to help sharpen the policy opportunities and be public voices out there. So I do feel like in a number of sectors there's that kind of very intentional relationship building and organizing that's happening now that feels really qualitatively different from years past. And there's multiple strands of arguments that are made around the values propositions I laid out and why it's in their interest. So I'll just leave it at that for the sake of time.
And this is Ellen. Every one of our coalitions have business partners. And the exciting thing is that there's a development in organized business partners. So the Association for Sustainable Business Council, ASBC, Main Street Alliance, Small Business Majority, these are groups that are really trying to coordinate finding best practice employers who support public policy and want to speak out on it. And we're connecting them with our campaigns and trying to make them more and more visible and have them explicitly say, the Chamber of Commerce, the NFIB, they don't speak for me. These groups are alternatives, and help discredit groups that claim to speak for mom and pop shops but in fact represent the interests of multi-billion-dollar corporations. So it's a very exciting development.
Fantastic, thank you. Wondering if someone could speak to any campaigns that are overlapping with Ban the Box efforts. So obviously the criminal records prevent a lot of specifically Black and Latinos from having the opportunity for employment. How does this overlap with some of the work that you all have been doing?
So this is Sarita. We have been pretty intentionally building with some of the groups that are addressing issues for formerly incarcerated workers who are trying to re-enter the workforce. So the effort I was describing of the future of work, this is definitely a strand of that. We're really trying to think through, because frankly the issues of contingent labor are not new issues for communities that actually have high rates of incarceration. So in the African American community, Latino community, some of these issues have been in existence for a long time, and so really trying to dig deep with some of the organizing and policy groups in those arenas to help us sharpen out or imagine the set of, again, organizing and policy hooks. So there is some intentional building we're trying to do. There's also a gathering or a grouping called the United Worker Congress that's brought together a lot of the organizing of workers that are happening outside of the traditional labor union movement. And there is a whole sector of formerly incarcerated workers that are a part of that table and also helping to imagine in a number of different campaigns where and how their voices are being elevated and experiences are being elevated, but also how more of us can be supporting campaigns like Ban the Box. So there is, I feel like at least in the organizing sphere, there are these connections being made. Yeah.
Great. Any other comments on that? Another question about the role of workforce development agencies and workforce development partners. Obviously, they prepare people to enter into the workforce or re-enter into the workforce. Are you finding that you have allies on job quality amongst workforce development agencies or partners?
Hi, this is Janet. We haven't been working as much with partners around the job quality piece directly, although I hope that we will be, except that we have been working to help job training programs and work-ready programs adopt some extra curriculum that would help workers going into the workplace understand a lot more about what the benefits are that might be available to them, what kind of benefits could be available to them, and how to access them. One of the things we found is that in workforce training programs and the work-ready programs, it's very much about how the workers should operate within the employment setting. They don't know a lot about HR. They don't know a lot about workplace benefits. And so that's sort of something that needs to get integrated into it, so as they go into the workplace, they can advocate for themselves and take advantage of things that may be available to them, but they don't even know to ask about it. It's a little bit what the auto-enrollment into retirement accounts is about, to have people have to opt out rather than opt in. But that plays out for lots and lots of other kinds of opportunities that may be hidden from view, particularly for the lower wage workers in the workplace.
Thanks. Others on that? Anyone? There are a couple of questions about other overlaps. We've talked about the fact that job quality is an issue that is relevant to many different types of advocates and overlaps with many different types of issues. Someone's interested in how public health has been integrated into this, and whether or not you are seeing partners amongst the public health sector.
This is Ellen. Absolutely. I mean, again, every one of our coalitions, we have some really great partners. School nurses, for example, who talk about what it means when they see kids who, their parents, when they get called to pick them up because they're sick, say, "I'm sorry, I'll be fired if I do," and what it means to that child and to, the rest of the school. We have the Public Health Commissioner of Boston narrated, the beginning of a video we called Contagion, Not Just a Movie, after that movie came out. We have physicians and nurses who've done protests with us and speak out. A guy who is a pediatrician at a hospital in Boston. And so it's very powerful, their voices, and again, we've been able to make greater connections, and there are now people in the public health world who are trying to increase our ability to make those connections. It's very exciting. We're also working with public health groups to stop something that we call preemption, which is a really undemocratic practice. In Wisconsin, for example, after we won paid sick days, the state legislature passed a bill that said cities and local units of government can't pass bills like that because the state has an interest in having a uniform standard Well, they couldn't say a uniform standard of sick days because that standard is 0. So they had to say a uniform standard of family leave, when the whole point about sick days is that family leave doesn't cover routine illness, and it's unpaid, and it only applies to people in firms of 50 or more. And they have since then taken that bill, the Restaurant Association and ALEC, and passed similar laws in now 9 states. We've stopped them in several places. They do it mainly in places that are, where they sneak it in and there's cover of night. And this is a public health issue. These are the same people who are learning from the tobacco industry and the gun industry to stop localities from being able to legislate protections on food safety and so on. So we're building these partnerships, which I think have potential for really great impact.
Thanks. We have 2 more questions. One is a question for you, Janet, around the occupations and asset slide in Table 2, looking at net financial assets and net worth. It's a question about what explains the larger increase for service employees than management employees.
I'm going to switch to Hannah here so that she can explain the table.
So I guess this table, just to start, and one clarifying question perhaps about the question itself, was the question related to the larger increase in income that service workers saw?
Yeah.
Yeah. So the people that were categorized, when we categorized the families into particular occupations in the data, there were a couple of particular families that saw much larger increases in income than the remainder of those 6 families. So I think it's about 2 families within that 6 saw much larger increases in their income. So I would suspect that those account for it, and they were families that were working in much higher paid jobs but who didn't get some of the same benefits. And so that was where we started to understand through some of those family stories the important role that employment capital was playing in terms of building wealth, where families saw big increases in their income, but they weren't seeing that translate into wealth.
Thank you. Thank you.
And we just wanted to respond also to the earlier question about the Latino population. So one of the reasons that this brief didn't focus on it was because the earlier data set was just looking at white and African American families from '98. But in the brief, we have a little bit of occupational data, and from other BLS data that we've looked at, it's pretty clear that some of these trends continue. And Hannah, just while you guys were talking, looked up a little bit of the data, so maybe she can report out on that.
Yeah, sure. So this data I'm going to report on comes from a Bureau of Labor Statistics report from 2011, and it looks at 2010 data. And it shows that Black and Hispanic workers are much less likely to be in management and professional and related occupations, which are occupations that you can see in the webinar. I think if you go back to Table 1, you can see those occupations are much more likely to have the kinds of employment benefits that we think are important. We also know that Hispanic men and Hispanic women are much more likely to work in the service sector than they are in the management and professional sector, again showing very similar trends to what we see among Black families.
Thanks. We're going to take this one last question, and I think it's a very, very good one. We all know that most American jobs are in small businesses, and many small businesses are under-resourced to provide employee capital, the types of things that we're talking about today. That's an assumption. Wondering if any of you want to speak to either small businesses that you are working with that are models for doing this work, or how to talk about in the national narrative, not juxtaposing sort of entrepreneurship versus worker rights.
So, this is Ellen, I can say a little. You saw the pictures I had in my slideshow of Freddie Castablanco and the couple, the Hausers, that own an auto repair shop in Oregon. They are part of this effort. Both of them are members of Main Street Alliance. And basically what we've helped work together on messaging and enhancing the visibility of their voices, finding ways for them to do op-eds, letters to the editors, speak, testify, be available to the media, and so on. And really, the message I was saying is what they're saying. It's good for our bottom line. It's good for the economy. And we also believe there needs to be a floor, that everyone should have access to it. And that's good for us, too, but it's also the right thing to do for workers and their families. And so I feel like just keep expanding that. Wherever I go, I try to convey the message to best practice employers at bigger companies that we need them not just to be doing this themselves, but also to speak out about the importance of public policy for it. Glad to talk to anyone who wants to know more about that.
Fantastic. Thank you all so much. I want to give a virtual round of applause to you all. Thank you, Kilolo at the Ford Foundation and the Building Economic Security Over a Lifetime initiative. Thank you to Janet Boguslaw, Tom Shapiro, and Hannah Thomas for at the Institute at Assets and Social Policy for all of your fantastic research and advocacy, to Sarita Gupta with Jobs with Justice, and Ellen Bravo with Family Values at Work. This has been a fantastic conversation. We do have a few closing points. If you have a moment, please complete the short pop-up survey that will appear on your screen once the webinar has ended. And please do follow us, follow PolicyLink at PolicyLink or at Access to Assets. And follow IASP at IASP_Heller. We will make this webinar available, the recording and the presentation online, and you will also receive a post-webinar email this week. Thank you all for joining. Have a great day.